Hello and welcome to the Global View on this Friday. Let's take a look at what's going on at a macro level. The fight to restore price stability has a long way to go. Fed Chair Jerome Powell has told an IMF conference. He said, if it becomes appropriate to tighten policy further, we will not hesitate to do so. Over a longer term, he said, the Fed may also be less able than in the past to ignore supply shocks as a source of persistent price increases, saying supply shocks that have a persistent effect on potential output could call for restrictive policy to better align aggregate demand with the suppressed level of aggregate supply. He also said it's too soon to know if the era of low interest rates that characterised the decades before the pandemic were gone for good. Well, a weak auction of $24 billion in 30-year treasuries saw the yield on the 10-year note jump 12 basis points to 4.64%. Meanwhile, US jobless claims edged lower last week to 217,000 in a sign that redundancies have yet to accelerate, despite signs of a cooling labour market. The US dollar rose after Jerome Powell left that door open for further monetary tightening. The Aussie dollar has weakened, currently trading at 63.7 US cents. Well, American credit card debt increased by $154 billion year on year to reach a record just over $1 trillion in the third quarter. It is the largest increase since the Fed began tracking household debt in 1999. To talk us through what that means, the implications, what it's telling about the economy and the American consumer, Brad Gasworth joining us from Unearthing Opportunities. Brad, very good to catch up with you. Thanks for joining us. All right. So I guess specifically then, you're more concerned about those rates of delinquency. What are you seeing then?
Yeah, we've definitely gotten some unbelievable credit that has been given away to consumers, and delinquencies we really have to pay attention to. If you look at millennials right now, they're leading with delinquency, and with right now with inflation and higher prices, people are borrowing money to pay for things, and delinquencies are by far the most important thing to watch. We're keeping a very close eye on it.
All right. So when you look at what you're seeing there with that credit card debt, is that attributable though to, obviously we're seeing that resilience for the American consumer in spending? Are they just spending, continuing to spend at those levels, despite what we're seeing obviously with interest rates?
Yeah, and Andrew, that's a good point. There's a lot of, it's sort of a bifurcated thought process here with the large debt that we're seeing on the credit card side. You have the bulls saying this is good for GDP, it's good for growth, consumers are spending. And then you have the people who are a little bit more cautious on that data point, like myself, where right now, if you get delinquencies higher, it's troublesome. So we're reaching some of the maybe in the last decade plus of delinquencies. And if it continues to increase, it's something that's going to have some negative effects.
Um, Negative effects being what? How are you seeing this play out then, Brad, with, I guess, perhaps the prospect that with the US economy weakening, where it leads to?
Well, so that's exactly right, Andrew. If you have, a slowing economy, people not able to pay their debt, you have people then having not the purchasing power that they did before, and then you have lower GDP. So I'm on the flip side of, if delinquencies increase, that purchasing power goes away, and then all of a sudden you do have slower growth.
What then, Brad, is your outlook for particularly those consumer-facing stocks? I guess particularly measure that with what you've seen in the latest earnings results.
Yeah, I mean, and that's probably the most important question, Andrew. If you look at right now, it's a bifurcated market as well. So the very low end, so the very low end retailers, and then the very high end, those are the ways to play it. You need to sort of stay away from. If you look at the food market, I'm not into any of the fast food chains. I don't think that's the best way. I think on like the dollar store is an interesting play. I think Target and Walmart are interesting. But ultimately, if you're going to play commerce, Amazon's still by far the best to play and one of my favorites on large cap.
All right. Brad, we've spoken about commodities previously. I'm interested to get your view of where we're sitting right now. Let's begin with oil. Of course, it's come under considerable pressure just in the last couple of weeks. Did see it stabilise overnight our time. Where are you seeing the oil price go at the moment?
Yeah, I mean, it's interesting. I mean, one of the things with inflation, if oil continues to go down, this is a really good thing ultimately, as it was one of the drivers for some higher prices. I think you still see some downward pressure, even with what's going on in the Middle East. I think there's, slowing economies across the board, and that's going to put a little bit pressure on the oil side. I think that's good ultimately for inflation, but ultimately the numbers going down because of growth. So, it's a double-edged sword. I think it continues to have a little bit downward pressure here, but then I think you don't have that increase in spend. I think the spending goes down as well, which I think everybody's really looking forward.
And what's your view in regards to those precious metals? I know you've been in favour of them since we've been speaking with you in the past few weeks. Do you remain relatively bullish?
Yeah, I mean, I continue to see gold and silver as a must own in any portfolio. If you look at what's going on across, across markets, across different asset classes, it's one of the safer investments, and there's still a lot of upside opportunity. So, I think you can, either buy the precious metal outright. If you're looking at gold, I guess the easiest way from a stock perspective is Barrick Gold, GOLD is an interesting, but I think ultimately consumers, if you just own gold or silver, it's a great investment. It's going to do well, and I think you're going to see it do quite well over the next, call it 24 to 48 months.
Brad, I also know you've got a close eye on China, in particular trade between China and the US, with representations made recently, of course, with World Treasury Secretary Janet Yellen is hosting the Chinese Vice Premier, I gather, today. And that sort of comes back with that backdrop as well, given what's going on with those restrictions being put on selling chips into China.
Yeah, Andrew, and it's a good point, and I think there's a lot of bulls out there thinking that there's just going to be all of a sudden this amazing deal that's going to be done between these two powerhouses. I don't see that happening at all. I think both will have their hard line, especially President Xi. I don't see him caving in, and unfortunately, I don't see a positive outcome post that meeting. There might be, some rhetoric that, they're meeting, so that's positive. Ultimately, both sides, unfortunately, have been taking very aggressive moves, and I don't see that slowing down.
So, what then is your view on those Chinese listed companies?
Yeah, it's a good point. I mean, I think there's a lot of interesting companies in mainland China if you're buying A shares or even through Hong Kong. But a Chinese company listed in the United States, I would stay away from. I think there's too much risk of waking up overnight where some big downward pressure could come, and I just don't think it's worth the risk. And the risk reward's definitely not there. If you have interest or if you have the opportunity to purchase Chinese shares that are, Chinese listed companies in China, A shares are very tough to purchase. But if you are able to, there's some great companies from that side. But the reality is that economy is slowing down, quite a lot right now, and I think there's going to put a lot of pressure on the global markets.
What of those American companies selling into China? And I did mention the issue of chips, Nvidia being the most obvious one there. How are you seeing the outlook then?
Yeah, and I mean it's a good point there, Andrew. I mean, if you look at Nvidia, they actually put a big warning a couple quarters ago, and the stock, it sold off after the announcement of what they could not sell into China, but the stock's been on a tear after executing incredibly well. I think you have to look at other companies like the other mega cap Apple. What happens if all of a sudden China does something to restrict iPhones? That's a that's a possibility. It's definitely not off the table. And if something, we wake up one morning and that's the case, that stock's under significant pressure. So I think there's, you're hitting on the head. Anybody who has a significant portion of revenue and profits coming from that region, you have to be very careful with if you're a U.S. listed company.
Brad, another sector coming under some pressure, particularly given what's going on in China at the moment as they seek to undercut prices, is with EVs. And I guess that's obviously, we've seen that effect on Tesla most obviously. But what about some of those legacy car makers such as GM? Where is that placed right now?
Yeah, I mean, China's done, definitely gone to bat on the EV side. GM's news that came out yesterday, and then further, more today about the recall and then the stopping of their van line. I mean, this is not a positive at all. They were looking for in the future, I think, by like 2030 to have 50 billion in revenue. That number is not going to happen at all from that department. And this is just a little bit of a black eye. I mean, they had a big accident with their autonomous van. Then they got suspended from having the autonomy. And that when that type of thing happens, you're going back to square one. So that's a major issue. I think the incumbents are going to do quite well with EVs. There's going to, they know how to make cars. So Ford's been around over 100 years. They are very good at making cars for the consumer. Tesla is an unbelievable technology company, but my first Tesla, the P85D, it's very bare bones. I mean, it's a great car, it's super fast, but it's not made for somebody buying a car. It's a great technology, and you're saving gas and you have a lot of cool features, but it's really bare bones. So I think when you have the incumbents like a Ford, Mercedes come in, they're going to execute very well. And not saying that's going to derail Tesla, but it'll be formidable competition on the EV side.
So, Brett, if you're looking to invest in that EV sector, where specifically then do you see that opportunity? Which companies are you liking now?
Yeah, it's great question. I'm actually away from investing. I'm not a bull right now on EVs. I think you can make a case if Tesla falls down further when it gets to a valuation that's a little bit that you can make some sense to is the time. I was a long time on bull on Tesla for over a decade, but at these valuations you can't run and buy the stock. On the other ones that listed in the U.S., you've had a few different, the Vietnamese company, you've had, even Riva. You have all of these guys coming in, and they are producing 5 to 10,000 cars. So the numbers are so low, and they have 10, $20 billion valuations. You can't make the math work. And Tesla was very unique, so they got a big valuation, but they also had something interesting. They were first market mover, but they also, the big secret behind it is there's supercomputer and their technology that can't be replaced by an EV car maker. And all these, they're great little cars. They're not going to make any headway into Tesla's market share.
Brad, great to get your view from Unearthing Opportunities. Thanks very much for joining us.
Thanks, Andrew.
All right, just before we go, let's have a quick check of the market, and that's where we're expected to open down around 5 points is where ASX futures are at the moment. And just a reminder also, of course, next week coming up, registrations are open for our virtual investor event, Small Caps, Big Ideas. It'll be bigger, better and faster this year. If you weren't a subscriber in previous years, we bring you 10 of Australia's leading small cap fund managers to each present one high conviction idea. And this year, we're throwing in a fast and furious special edition of the call featuring microcaps chosen by you. You can register on demand or at ausbiz.co/smallcaps23. That's ausbiz.co/smallcaps23. Stay with us. The Open, just around the corner.